All right, what is up, everybody? Today is July 31st, and we are actually going to go over two things in this video. We're going to go over my monthly review for July, which is my best month so far, which is going to be really exciting. And then the second half of this video is going to be a check your stats before you wreck your stats part 2, because some people did request and wanted to see that. So we're going to go over both those things. So let's get into it. So July, it was like I thought June and May and April were slow. July was probably the slowest month for me. I think I tweeted out I only traded 19 times, or only took 19 trades, which is the lowest. I mean, in really exactly a year. But the great part is that I was given some opportunities and I took advantage of those, and that pulled out to be the best month I've ever had. So we'll talk about those. So first week I got spanked by FCell. This Wednesday and Friday was FCell, so 1,700 on the week in losses. If those of you who remember, FCell was in the beginning of the month, a runner from 20 cents all the way up to $1. And so I was looking to short on this third day here. And so immediately at the gate, it showed weakness, so I got short. And then we got the second candle. So I thought, okay, I'm already in the green. This is going to probably work for me. And I remember having a terrible ad in the low 80s. And the reason why I thought it was bad was because I was kind of too eager and I tried to chase weakness in this wick down here, and then it just ripped. And I mean, it ripped from 76 cents all the way up to $1. And so immediately when it started breaking this pre-market highs, I had to cut it. It's really unfortunate that I had to cut it such a huge move like this. But at the same time, the last thing I want is for it to go over $1 and just absolutely squeeze me. So I cut it here. That was $700. The first 700 of this day. And then I saw a lot of resistance in the ones, and then I saw even more sellers come in the mid 90s, so I reshorted. First it worked, right? Kept grinding, and my biggest mistake that I made here was I moved my risk down too early. I saw that it double topped here at 94, and so I thought, if it breaks 94, I want out. I don't want to be in anymore. This isn't working. I don't want to lose anymore, which is not the right thinking, right? I should probably pick the highest odds risk, which is $1. It's a psychological number. There was a lot of sellers, whoever saw the tape there, was watching at the time. And so, of course, it holds, it pops right through. I cut it right here, which is really the highest it ever went for the rest of the day. And it never broke 1. So if I just kept my risk at 1, I would have never taken the second loss, which got me to, almost 1,200 on the day. And it worked. But the fortunate part is that I was shorting this at Interactive Brokers, and so for those of you who know I have Interactive Brokers, the shares were first come, first serve. So immediately when I covered and it started showing more weakness, all the shares dried up, they all went away, and I completely missed this move. So that kind of adds insult to injury, makes it twice as worse, because if I just didn't cut it here, I would have held on, and I actually would have, I don't think I would have made much more money, but I certainly would have made back my losses from this trade if I had just held on and pulled it to here. So really frustrating, but this was the day before 4th of July. So I said, you know what, let's forget about it. I'm going to review it later. I'll learn from it. And so then come Friday, I'm thinking, okay, looking at this big picture here, it's clearly backside. There's a massive pullback. This is now a bounce. It's probably going to, bounce off and just keep fading off. And so that's what happened. So I tried to short into this. Got I think a okay average, like maybe high 70s, but it really wasn't that great. I probably should have waited for this spike, because it was almost the same pattern, right? They both pulled in the morning and then a big spike, smaller pull, but also a decent spike to add. And so I held on. I was down here and I was like, okay, right, this is going to work. And my next mistake is that all I could think about was making back my losses from this day, right? That is a terrible way to think about it, because it essentially, that's a type of a revenge trade. I'm not even, at this point, I'm not trading this just trade it well. I'm trading it to make back my losses, which is a terrible mindset. And so, of course, when it comes back down here, I'm thinking this thing could retest, these low 60s and go lower. And so I held. I didn't cover anything. In hindsight, obviously, it's easy to say I would have covered some, but I know for a fact, even with my original plan, I definitely wanted to hold for these low 60s and lower. The mistake was thinking, right, that I could make all my money back, so I held everything, right? At minimum, I should have covered at least 10%, maybe a quarter right here, because I didn't cover anything, and it comes back and it squeezed me. I remember cutting it into this push, and that now resulted into another $500 day of losses. So that was really frustrating. Took a chill pill over the weekend, and I just let this alone. I realized I was too emotionally attached to this ticker. I was, wasn't making smart decisions. So, this day and this day, I just avoided. I watched it just to kind of like watch price action for practice, but I did not take any more trades than that. So that's that. Then next week, started taking some more singles. On the 11th was really cool because Preed had an awesome panic. And I think it was some firms came out saying they were short. So, of course, the stock starts panicking, and I watch level 2, and I am able to fill like really near the lows for a dip buy. And this doesn't look like much, but this is 220 to 250 within like 5 minutes. So that's over a 10% gain. So right when I got long, I immediately was selling, within the same minute, if not 2 or 3 minutes later. And so that was a nice, $700. And then the next day, we have my first huge opportunity, which was VSEX. Now, if you've watched my very first video lesson on YouTube, I can link that in the description below. But I go over this exact setup just on a different ticker. It's a pump and dump, and it got the caveat emptor. And so, I had to at least make sure the price action wasn't against me, and it didn't. I banked, right? I got short in this first green day. Did have a green day, but a 50% gap down, which was a little bit scary at first. But I had a plan. I stuck to it, and the next day it dumped, and I covered in the 30s for what is it, $4,000? Yeah, $4,000. So immediately made back all my losses from FSL and already up on the month. So that felt really good. Next week on Monday, we have another pump and dump. So again, another big opportunity that I'm a super big fan of. This is a very much more steady grinding pump and dump. A lot lower volume, but a pump and dump nonetheless. And I actually tried shorting it a couple times in this run up in here, and I got bought in. So it was kind of scary shorting it for a third time now. And I was like, okay, I could get bought in, but this is a very slow mover. My risk is usually low over the course of a week or two, so I'm going to give it one more shot. Luckily I was able to find shares in this last week or so, and this thing didn't get the caveat emptor. It just dumped how pump dumps used to dump. It's funny me saying that's not how these usually dump anymore, but this is how it used to happen. It dumps, no news, no nothing, and the promoters left it for dead. And I covered, in the 20s and 30s. And of course, 2 weeks later, the SEC halted. So it's actually halted right now. It'll reopen, I think, in like 2 weeks or so. So that's kind of funny. Although I'm not sure anymore. I'm all flat on that ticker. And then, so this is where it gets like the slowest of the month. I didn't take any trades for 3 days. I think I took a nap each one of these days. That was terrific. And then small loss here. And then next week, if you follow me on Twitter, I've anticipated this trade forever, which was Beeg. Was shorting all up in June this past week, and the very first day of July trading, it got halted. So halted for 2 weeks from the SEC. It reopened, and which is really odd. It scared me, which is that it reopened almost at its closing price. Usually when you see these things reopen, they reopen down like 60, 70, 80%. So the fact that it reopened at 105 and it closed at 106 kind of freaked me out. I was like really scared for the first part of the open. I was like, is this thing not gonna dump? Like, is this thing gonna squeeze me back, and give all my money back? But it finally went down. The biggest pain about this trade, though, was that when it gets halted and it reopens, it's on the gray sheets. On the gray sheets, there is no level 2, right? You can't see any bidders, you can't see any sellers, and most of the time you actually have to call your broker to put in your order. You can't put it in through your software yourself. And so this thing went down to about the 40s or 30s. The low day was 30 on this day. And I thought to myself, okay, I'm gonna call my broker, put my order in at 25. I'm gonna get the next, downside of weakness. That never came. And then I proceeded to then have to hold this, not have to, but held this for the next like 5 days because I couldn't get filled. I kept putting my bid at 25, and even though you see this low a day for the next day was 25, it's so illiquid and you can't see where the bidders or sellers are, so you don't even know, even if it hit 25, it could have been somebody else, right? I have no idea how many other bids are there besides me. So this took forever, and it felt like forever for me holding over a week. And finally I realized like this is not going to hit 25 in the time I want it to. I'm just going to get out. So I covered it in the low 40s. Still my biggest gain to date, which was really cool. Just a little bit frustrating with how long it took me to unfortunately cover, but that's what I get for trying to stay way too long for a gray sheet stock that has no level 2. So that's a good lesson there. And then the 25th came around, and this is sweet because I had another $1,300 day. This was with Nuggle. Let's go here. This is another pump and up. So again, this month, just consists of pump and ups, which is really like what made my month, essentially. So this pump and up has been lasting for over a year now. It's really, really long. I'm surprised like the SEC hasn't halted or anything, but it had this little bounce, like this repump. And so once it went red on the day here, I shorted here, held most of it this day, and then covered into the panic on the second day. So that was a nice gain. Also had a $400 gain on ACST this day, but then I gave it back on the 30th. And then actually today, it completely died, and I just froze up. I couldn't pull the trigger for whatever reason. I just couldn't get short, and it absolutely died. Completely missed this. So that's kind of got a bad taste in my mouth, but it happens. There'll be more plays in the future. So that's that. And then, what I did nail today was NAK. Yeah, NAK. This stock had news that the Trump administration was going to remove some restrictions on how they run their business, which is really good news. But if anyone who knows the market environment right now, it's really awful for longs. Anyone I've talked to who's been longing this month is getting absolutely destroyed. So I took that with a grain of salt. Next morning, I didn't think it was going to have the momentum to keep it going. And so when it gapped down and then right at the open couldn't have a strong morning spike, I started getting short in here. Immediately covered into this wash down here, held through this bounce, covered a little more here, and then took the rest off around in this area. So that was a sweet, $600, $700. So all in all, looking at my weeks and then the month at the end, you can clearly tell it was, VSEX, BKIT, and BEAG. Those three were the money makers. That's where I made my money. So it just goes to show, again, I've already talked about this in the past video lessons, but it's just sticking to your ideal plays, sticking to what you know best and what you can size up with the best. And when you get that opportunity, you take advantage of it. And then that's that, pretty much, you can ignore the rest, all the lesser plays. You don't have to really take too much size on. That's why all these losses are, smaller, or how small I like them to be. And, that's that. So that's pretty much my month. I know it's not as exciting or not as elaborate as some people might think. How'd you do it? There's got to be a special secret formula, but it's really not. It's just I waited for my ideal plays, and I was lucky enough to get 3 of them this month. So, $16,000. That's how it works. So that's it for the review. So we're gonna go into now check your stats for your regular stats part 2. So if you haven't watched the first version, go ahead and watch that, because I'm actually going to build off of some of these stats with other concepts of stats that I look at. So let's get into that. First one is going to be your average size winner versus your average size loser. So what do I mean by that? So say you look at all your wins, and the average price that those wins are, say it's $2. $2 stock is your average price of a winner. And let's say your average size is 2,000 shares. So at a general, broad spectrum, your dollar size would be $4,000. And these are for your winners, right? These are for when you win. Now for when you lose, let's say your average price of a loser is 4. And let's say you still trade 2,000 shares. So that's immediately going to be now $8,000. So what does this mean? What does this tell you? I'm using this as an example because this was very similar to what happened to me when I was unprofitable, which was I found out my losers had much more dollar size than my winners, right? When I was trading smaller size, 4,000 versus 8,000, I was winning more, right? My winners came when I had dollar size. And that's telling me that psychologically having more money on the line is messing with me mentally. I'm probably worried about the money too much. I'm probably worried about taking too big of a loss. So I'm making mistakes. I'm breaking my rules, etc. You can look into your trading more details to see what specific case it is for you. But just seeing this, that if your average dollar size is bigger for your losses, and it's exponentially bigger, twice as big for me when I was looking at this, and that's going to tell you should probably size down on all trades, and hopefully either more will become winners or your losses will at least be smaller. So pretty basic there. Next one is I get a lot of questions about, like, how, and a lot of people ask these questions to everybody really. How did you find what was working for you? How did you know if you were a long trader? How did you know if you're a short trader? How did you know if you like OTC better? How did you know if you like Nasdaq's better? And I'm telling you, looking at these stats from part one, and breaking them down individually. So in this video, I looked at a broad spectrum. I looked at long trades, short trades, Nasdaq, and OTC. But you can look at average gain and average win percentage and profit factor and win rate. You can look at all those for just short trades, right? You can look at all those for just long trades, for just Nasdaqs, for just OTCs. Now, you might have to do a little bit of work because Profitly can't do all those in one. You're going to have to maybe make your own Excel spreadsheet. But the work, I think, is worth it because you're gonna learn, oh my gosh, like my win rate for OTCs is 10% higher than Nasdaq's, or my profit factor is double the size in one area of the market over the other, right? You're gonna be able to narrow down and kind of funnel out the noise and find where your biggest edge is. So that's really how I found out I was an OTC short seller as my best stat, or as my best strategy. Was from looking at those stats and narrowing them down and kind of picking them apart. And so next one, this is not necessarily so much statistics, but it's more about concepts and helping you see the statistics better. So I don't know where I learned this, but seeing numbers on a spreadsheet like this, if I just gave you a bunch of numbers and you just saw them all together, oh crap, I'm messing up here. There we go. So if you just saw them all in a column, you maybe can tell a difference, but seeing them in a graph and learning how to make graphs in Excel is going to be super, super helpful. So what I've done when I do it regularly is I make graphs. I want to see in a picture form, what do my stats look like visually? And so this right here is, I call it a capital percent gain. So that this is just the percent gain I make on all capital. So I add up all my accounts, and then I find out what I make each month or lose, depending on your situation, and you find out, how much percent is that of your account. And so I know my range is from, my best month has been 24, 25%, and my lowest has been, I've lost 5% on some losing months. So, it's fine. It's nice to see this because I can see a channel. I can typically gauge, no matter what month it is, if I follow my strategy, it's going to land in anywhere between, maybe -5% at the worst to, to 20 to 25%. And I know from just averaging them all out, all these data points out, I'm at about 10, 11, maybe 12% a month. So that's good to see. I am able to visually see, my trading in a channel. Next is monthly P&L. I actually post this on Twitter. If you follow me, I post this every month for a monthly review. This is a picture of every month's P&L since I've, I think, started. And the reason why I think this chart is so important is because when if you ignore all these stats right here, or all these data points and months, and I just had this, I was still losing trader right here, but it felt good to see this because I could tell each month was getting lower, right? Each month I was losing less, and so this chart showed me an uptrend. Even though it was still losing months, I was still able to see I was improving, right? And so now, 2 years later, it's been nothing but profitability, and I just keep growing. It's clearly an inclining chart. So I wouldn't be able to know this if I didn't be able to visually see it on a graph. A couple more examples here is average percent gain, average loss, right? If back to this video, if you're able to find your, average gain to average loss, you can then graph it. And it's cool to see because now every month for almost, I think 2 years now, my average percent win is bigger than my average percent loss. And you could see this gap, right? You wouldn't, be able to see this clearly if you didn't graph it. And I think this is the last one I have. Average gain to average loss. Again, same stats from the last video. You can start to see how important it is to see this gap and where, if you're losing more than you're bigger or losing more than you're making. And so seeing this gap is nice. It lets you confirm with you, yeah, I can visually see my trading and how not only are my losses staying smaller than my gains, but my gains are getting bigger, right? They're increasing. They're increasingly getting, this gap is getting bigger versus my losses, which are really, really cool to see. And last thing, and actually this is why I wanted to include both the Check Your Stats Part 2 and the month together, because this last concept for stats is my month is a great example for this last concept, which is outliers. Now, what do I mean by an outlier? Perfect example, if we go back to, my months, or my percentage gain. Say for example, 1 month out of the blue, I make 40% of my accounts, right? Just totally break this range and I make up 40%. That's great, right? Like I'm super excited I made 40% of my account, but I wouldn't just leave it at that. I wouldn't just say, okay, like I'm done. I don't need to check this out. I want to know what allowed me to make 40% in 1 month, because it could either be it could be I found a new strategy or a new like rule to my strategy that could make myself a whole better trader, or B, it could be something that I have overlooked and it's actually making my system riskier, right? It just happened to work in maybe one market environment, which gave me a big percent gain, but in reality, if there's a dark side to it, that could easily let me lose a way more in another market environment. So, and I look at that for everything. So it's easy for everyone to think and want to be like, I just want the highest profit factor, or I just want the highest win rate, or I just want the most percent gain on my account, every month. But I think looking at outliers and seeing what stands out to you, is important. And so my month, for example, if we look at my stats from the last video, my average gain is like 9-10%. My average loss is like 4%. And this month, my average gain is 31% and my average loss is 8%. Like my average gain is triple and my average loss is double, right? I need to look at that. I need to know why that is. And so, watching my review of this month, having free pump and dumps where I make 60, 70, 80% of on my trade and then averaging that into all the other trades, that makes sense, right? This makes sense why my average percent gain is 30%, because I had 3 big gains that were 50% or more. So that skews my stats, right? So I understand that. And then for losses, why is my average loss 8% when it should be around 4 or 5? I looked at all my losses, and all my losses, I think but one, are under $1. And so if you know how under $1 stocks work, is usually their spreads and their liquidity is a little bit wider, right? I might have to risk like 10% versus 5%, because 5% on a 50-cent stock is, what is that? It's like 2 cents, right? That's not a very wide risk. I'm going to get stopped out pretty quickly. So in most stocks under $1, you tend to risk a little bit more. So that makes sense why it's 8%. So just knowing those things and not just overlooking them is going to allow you to like try to pick out your system and see maybe differences and things that you can hopefully tell that before something about the market changes, and then you have to pay for it in losses. So yeah, that's pretty much it. It's not, I'm not like some quant trader with like incredibly elaborate stats, but just all this stuff has allowed me to really just hone in on my trading and my system. And so hope you guys like it. I'll put a link for anyone who wants to know how to make these graphs on Excel. I'll put a link down in the description of like maybe a YouTube video or something I find on how to make graphs. They're pretty simple once you learn how to do it. So that's pretty much it. Hope you guys enjoy the video, and I'll see you guys next time.